Welcome back to Investing Talk podcast. We take the sources, break them down, and really pull out the key nuggets of knowledge for you. Think of it as your shortcut to being well-informed, maybe with a few surprises along the way. Today, we're tackling a question that's definitely on a lot of minds, especially if you follow tech and AI. Is Nebius Group a good buy right now? We've got analyst ratings from Benzinga, a full stock analysis, fundamentals, technicals, you name it. It's quite a look at a company right in the thick of the AI boom. And hey, we love digging into what interests you. So if there's a company or sector you want us to explore, drop a comment below. Seriously. And if you find this useful, please think about subscribing, liking, maybe sharing it, and perhaps even buying us a coffee to keep us going. We really appreciate the support. All right, let's get into it. Let's unpack Nebius Group. First up, what are the pros saying? We've got this Benzinga source with analyst sentiment. What's the general feel, and what price targets are we seeing?
Yeah, it's interesting. Nebius Group has a strong consensus price target around $70. That's based on 4 analysts they track.
$70, okay.
But when you dig into the specifics, there's quite a spread. BWS Financial has the high target, $90, from back on August 8th, 2025.
90, wow.
Yeah. But then on the other end, Northland Capital Markets set a low target of $47. That was back in May 2025.
47 to 90. That's a really wide range, isn't it? What causes such a big difference in opinion, you think?
Well, it often comes down to different assumptions, right? How fast will AI infrastructure grow? How much competition will they face from the big guys? A lower target might bake in slower growth, maybe more price pressure.
Okay, that makes sense.
Whereas the higher targets, like that $90 one, they're clearly betting on continued, explosive growth and Nebius keeping its edge. It really shows why you need to look beyond just the average.
Good point. So what about the recent activity? Does that narrow things down or give us a clearer picture of the immediate feeling?
It does, actually. The 3 most recent ratings, these are from D.A. Davidson and BWS Financial, in early August 2025, they show an average target of $76.67.
76.67. Okay, higher.
Yeah, which implies, about a 7.2% upside from where the stock was when those reports came out.
Oh.
And importantly, D.A. Davidson kept their buy rating on August 8th, but they bumped their target up from $65 to $75.
Okay.
And BWS Financial, same day, also kept their buy and raised their target even higher from $80 to $90. So that recent momentum definitely seems positive. Analysts are adjusting upwards.
That is encouraging. Seeing those upgrades, it feels like the market's reacting positively, but it makes you wonder, is this just chasing good news, or is there something really solid fundamentally driving this confidence?
That's exactly the right question. You can't just rely on analyst ratings. We have to look at the underlying numbers.
Yeah.
So let's talk about the company's financial health, its competitive position, what's really standing out with revenue and earnings.
Right, the fundamentals.
Okay, so this analyst confidence, it seems pretty well-founded. The fundamental analysis shows Nebius Group reported, strong Q2 2025 results. Their unaudited revenue hit $525 million.
Oh, $525 million, wow.
Yeah, and that's up 44% year over year. Plus, they raised their guidance for annualized run rate revenue, the AR, up to $2.1 billion.
44% growth and raised guidance, that's significant.
It is. And they're showing decent margins, too. Gross margin was 56%, net profit margin 13% for the quarter. Turning revenue into actual profit.
13% net margin in this kind of high growth phase is pretty good, right? Shows some efficiency.
Exactly. It suggests it's not just, growth at all costs.
Yeah.
And EPS for the first half of 2025 came in at $1.72.
Okay, strong growth, solid profitability.
Yeah.
What about the balance sheet? Are they managing their finances well with all this expansion?
Seems like it. As of June 30th, 2025, they reported having $980 million in cash against total debt of $450 million.
All right.
So they're in a strong net cash position, more cash than debt. That gives them a lot of flexibility.
Oh, yeah.
And they're generating cash, too. $93 million in free cash flow, $112 million in operating cash flow just for Q2. And their debt-to-equity ratio is only 0.32, which shows they're not overly leveraged. Pretty prudent.
Okay, so finances look solid. But what really makes Nebius Group stand out, it's a crowded market. You've got the giants like AWS, Azure. What's their special sauce?
Yeah, their competitive position is quite interesting. They're an AI-focused cloud provider, sure. But what sets them apart is their specialized brands. It's more than just servers.
How so?
Well, they have Toloka AI, which focuses specifically on data for generative AI, like cleaning and prepping those huge data sets. Then there's 1010 for AI education, kind of building a talent pipeline. and Everyday, which works on autonomous tech.
Ah, so it's like a whole ecosystem.
Exactly, a full stack approach. They
Yeah.
focus on GPU clusters, developer tools, all tailored for AI. It gives them a real edge because they're not just selling compute power, they're enabling the whole AI development process for their customers. Makes them stickier.
That's a smart angle, like building a custom toolkit for AI developers, not just renting warehouse space. Seems like a good niche.
Yeah.
But how defensible is it long term? Could a bigger player just copy it?
That's always the risk in tech, right? But their defense is probably in the integration, the continuous innovation, and the network effects within that ecosystem. Is the synergy between data, education, application. Hyperscaler could try, but building that integrated offering takes time, specific talent, and deep AI workflow knowledge. Nebius has a head start and maybe more agility because of that brand focus.
Okay, so we've got strong fundamentals, positive analyst buzz, and this unique competitive angle. Now, the big question, how is the market actually valuing all this? Is it already priced in, or is there still room to run? What do the valuation metrics tell us?
Right, let's connect this to the stock price. As of late August 2025, Nebius Group was trading at a forward-to-PE ratio of 28.3.
Okay, 28.3, and how does that compare?
It's a bit higher than the industry median for cloud infrastructure, which is around 24. Same story for price to sales, 7.2 for Nebius versus 6.5 median, and price to book, 3.8 versus 3.9.
So there's a premium baked in.
Yeah, definitely. The market seems to be recognizing their growth and leadership potential, and you're paying a bit extra for that.
That premium makes sense given the story. But what about, say, a discounted cash flow model? Something that tries to figure out intrinsic value based on future earnings. Does that suggest it's fairly priced, or?
Good question. A recent DCF analysis using company guidance and analyst consensus actually suggests a fair value range of about $72 to $81 per share.
72 to 81.
Okay. Yeah, this assumes, pretty strong growth, like a 30% revenue CAGR, and uses a 9% discount rate. So where the stock is trading now implies maybe some modest upside within that range, but it also highlights that the current valuation really depends on hitting those strong growth numbers.
Got it. It's price for growth, basically. So turning to the charts, what's the recent price action like? Any technical signals we should be aware of?
Well, looking at the past month or so, the stock traded mostly between $67 and $76. It's coming consolidating near the highs it hit after those strong earnings. Support seems to be around the $65 to $68 level, with resistance up near $78 to $80. Technically, the stock's still in an overall uptrend. It's trading above both its 50-day and 200-day moving averages, which is generally seen as bullish.
And momentum indicators, like RSI?
Yeah, the RSI is around 61. That's kind of neutral to bullish territory. Not wildly overbought, but definitely showing strength. And the MACD indicator is positive too.
Okay.
So the technical picture suggests the uptrend could continue, but maybe watch out for some short-term consolidation or pullback, especially since trading volume has eased off a bit after that initial post-earnings excitement.
All right, now for the really interesting part, maybe, future drivers. What recent news has been significant beyond earnings? And what potential catalysts are on the horizon that could move the stock? And of course, the flip side, what are the risks?
Well, the biggest recent news was those Q2 results on August 7th, raising the ARR guidance because of broad AI demand. That was huge.
Right, that definitely moved the needle.
And it directly led to those analyst upgrades we talked about, pushing the average target up towards $82. Looking at social media, sentiment seems, moderately bullish. Lots of talk about AI tailwinds, but also some chatter about that premium valuation.
Any insider moves? Buying or selling?
No recent reports of significant insider buying or selling, which could suggest management feels the current price is, reasonable.
Okay, so looking ahead, what are the next big things to watch for? Potential catalysts?
Short term, the big one is probably the Q3 earnings release. That's scheduled for October 30th. That'll be the next major check-in on whether the growth story is still on track.
Right, everyone will be watching that.
We might also see news about strategic partnerships, maybe deals to expand their GPU capacity. That would be positive. Longer term, keep an eye on potential expansion into Asia-Pacific, new AI software as a service products, and just generally how well they keep scaling those cloud GPU clusters.
Makes sense. Now let's talk risks. Every investment has them, especially in a hot sector like AI. What should listeners really be thinking about here?
Absolutely critical to keep risks in mind. For Nebius specifically, there's potential customer concentration risk relying too heavily on a few big clients. Cloud spending can be cyclical, so that's a risk. And competition from the hyperscalers, AWS, Azure, Google Cloud, is intense and isn't going away.
Uh-huh.
They also have high capital spending needs. Buying all those GPUs isn't cheap, and significant R&D costs. If growth slows, that could really squeeze margins.
And broader sector risks.
Yeah, the whole cloud and AI space is tied to overall enterprise IT spending. If businesses pull back, Nebius feels it. There's also potential for new regulations around AI, which is still a bit of a wild card. And finally, as we've discussed, that valuation risk. High-growth AI stocks are vulnerable if market sentiment shifts and those multiples contract.
That valuation point seems key. Even if Nebius executes perfectly, if the market just decides AI stocks are too expensive, the stock could fall.
You're right. Exactly. That's the sector re-rating risk. It could happen, even if Nebius keeps putting up great numbers. It's why understanding that premium valuation is so important. You're not just betting on the company, but on the market, continuing to value this level of growth so highly.
Okay, so let's try to pull this all together for the listener thinking about Nebius Group right now. Balancing everything, the growth, the niche, the financials, the risks, the valuation. What's the overall investment thesis look like?
Well, Nebius certainly presents a compelling story. You've got strong revenue growth, clear leadership in this very attractive AI niche, pretty solid margins, and a healthy balance sheet. That specialized full-stack approach is a real differentiator.
Right.
But its current valuation already reflects a lot of that expected future growth. That makes the stock sensitive to shifts in market sentiment, sector trends, and macroeconomic factors. So the risk-reward profile looks favorable if you want exposure to long-term AI growth, but you have to accept the potential for volatility and drawdowns, especially if those high sector multiples come down.
So given all that, what kind of investor is Nebius really suited for? And what kind of time frame should they be talking about?
This really looks like a stock for a long-term investor, someone who believes in the secular growth trend of AI and is comfortable with volatility and paying a premium valuation for that potential. It's probably not ideal for someone looking for quick, stable returns.
Not a get-rich-quick stock.
Definitely not. Now, short-term traders might find opportunities around earnings or specific news events, but the core investment case here is built on that long-term AI story and Nebius Group's role in it.
So it sounds like investing in Nebius is less about finding a hidden bargain and maybe more about making a calculated bet on the pace of AI adoption itself through a focused player. Is that fair?
And that's a great way to put it. The real insight isn't just their current performance, which is strong, but recognizing you're effectively buying into the future trajectory of the entire AI industry. Your return depends not just on Nebius executing well, but also on the market's continued collective belief in AI's rapid impact. It's a different kind of bet than buying, say, a stable, established value company.
That was incredibly helpful, really unpacking Nebius Group from all angles. We've covered analyst views, the financials, their unique AI focus, the technicals, catalysts, and those crucial risks. It seems clear, strong player, exciting market, but that valuation definitely requires careful thought and a long-term view.
And maybe a final thought for you, the listener, to chew on. In a field like AI that changes so fast, how much extra are you truly willing to pay today for what you think leadership and growth will look like tomorrow? Especially knowing market moods and regulations can shift the goalpost pretty quickly. It's a fundamental question that goes way beyond just Nebius.
That's a great point to ponder as you do your own research. Thanks so much for joining us for this look at Nebius Group. We hope you feel more informed and ready to navigate the markets. Until next time, stay curious and keep learning.